Hi guys, welcome back to another episode of Small Steps to Freedom. If this is your very first time here, welcome to Small Steps to Freedom. We talk about all things personal finance to help you take control of your money. So be sure to hit the subscribe button for all our content. On today's episode, we'll be talking about investing in a tax-free savings account for your child. So I'm sure we all understand that raising a child can be a very expensive exercise. In fact, according to Parent 24, you can expect to spend about 90,000 rands a year raising your child until they turn 18. And this is excluding inflation. It is also excluding tertiary education. So you can imagine just how much money you would have spent taking all those other factors into account. So this is where tax-free savings accounts can really help in terms of allowing you to provide the life that you'd like to provide for your child. So in today's episode, we'll be looking at the benefits of investing in a tax-free savings account for your child, as well as running through an example with you guys just to show you the potential growth in a tax-free savings account. And lastly, of course, I will give you guys details in terms of type of process that you might go through when you open tax-free savings account for your child, the type of documents that they ask for, as well as some of the brokers that actually allow you to do this. So let's get into it. So let's look at the benefits. The very first one being time. So because you're investing on the behalf of your children, they have a lot more time to allow for their investments to grow and compound, and this is something they can really use to their advantage. So one of the biggest advantages with this is the risk aspect. So because they have a longer time horizon, they're actually able to invest in more riskier investments that would bring potentially higher returns. This is something that you can definitely use to your advantage when you're investing on the behalf of your children in order to maximize potential profits. The second sub benefit of time is compound interest. So because they have the time on their side, they are able to actually allow for their investments to grow and compound over time without putting pressure on it to give them money now, because your unemployed relatives do not have any responsibilities. The biggest benefit in my eyes is the opportunities that tax-free savings account actually open up for your children. So for example, you can use the tax-free savings account for your children to fund their university education. You can use it to help them buy their first apartment. You can use it to help them start their first business. There's literally so many things that you can use that tax-free savings account money for in the future. And because it is growing tax-free, it means you're actually getting way more than you would in a discretionary investment account. So with all that in mind, let's run through some numbers. To help me illustrate my example, we have Tembi here. So Tembi recently had her baby boy in 2020 and is planning on contributing into a tax-free savings account for her child until she ultimately reaches the lifetime limit. So assuming that she's actually able to stick with this goal and max out that account each year, she would have reached the lifetime limit by the time her child turns 14. Assuming also that account returns 10% each year, that whole portfolio would be worth just over R1 million by the time the child turns 14. And that is a lot of money. Let's compare this to a situation where Tembi goes a different route and decides to actually invest in a discretionary investment account instead of a tax-free savings account. That discretionary investment account does not come with the benefits of a tax-free savings account in that you still need to pay tax on that account. So assuming that she still contributed the exact same amount, 500,000 rands, returning 10%, giving her a portfolio of over R1 million, she would need to pay capital gains tax of up to 18% of that amount, which is over 90,000 rands. So that's where tax-free savings accounts really hold their gold, in that you do not need to pay tax when you withdraw those funds. You don't need to pay capital gains tax, you don't need to pay dividend tax as well. The one downside with investing in a tax-free savings account for your child is that if you do reach that lifetime limit, they will not be able to actually open an account in their own capacity when they reach adulthood. But if they're actually able to allow for their money to sit for even longer, for 10, 20 more years, the money would grow even more. So we've run through the benefits of investing in a tax-free savings account for your child, as well as an example to show you guys just the amount of potential growth that a tax-free savings account can hold. So if you do decide to open a tax-free savings account for your child, you have a few options available to you. So you can open one with a normal brokerage company like Enquiries, or you can open it with a bank, there's a lot of options in terms of companies actually offering this app. And with that, you'll actually need your FSCA documents in order to open that account. That is your own ID documents as well as residential documents, of course, as well as the child's identification documents in the form of their birth certificate or ID number. But I do have a tip if you are investing on the behalf of your child, even outside of a tax-free savings account. So there's this thing called donation tax, where you're only allowed to donate up to 100,000 rands per person each year. And when I say per person, doesn't mean the person receiving the money, but you as an individual are allowed to only contribute up to 100,000 rands each year, tax exempt, and then anything above that is subject to donations tax. So if you do actually want to learn a little bit more about donations tax, I'm going to leave a link to SALS's website where they give a really nice breakdown of that, so that you can make more tax efficient decisions. But if you're only investing in a tax-free savings account for your child, the donation tax would not matter to you, because you're only allowed to contribute up to 36,000 rands in that tax-free savings account each year, and that is literally less than half the amount that you're allowed to donate tax exempt each year. So that is it on investing in a tax-free savings account for your child. I really hope that this video gave you all the information, or some of the information that you need to actually make a decision. And remember, investments are a really great gift to give your children. They might not appreciate it now, but definitely will appreciate it when they're 18, or when they actually understand the value of money and how money works. But anyway, until I see you on my next video, bye for now.